Hi, today we're going to talk about how to read your closing disclosure. And if you've made it to closing, this is an exciting time if you're getting this disclosure. My name is Pete Montesino. I'm with Service First Mortgage, and I'm looking forward to guide you through this process. We're going to start at the top. You'll see the name is closing disclosure. I'll call it CD from here on out, just to abbreviate a little bit. The CD must go out 4 days in advance. So if you receive, the issue date is 4/6, 4/7, 4/8, 4/9, 4 days. Okay. That's the requirement. By federal law, requires us to issue this closing disclosure 4 days prior to closing. If it does not go out and you need to close, let's say on a Friday, you need to receive it by Tuesday. If you get it on Wednesday, odds are your closing is going to be moved to Monday. In certain situations, maybe they could close on a Saturday, but more than likely it's going to go to a Monday. So date issued, these are your important dates. When you receive, when the closing is, and then when it disperses, that is your funding. Usually on a purchase home loan, the closing date and the disbursement date are going to be the same day. Okay. Settlement agent, that's where you're closing. That's the property's address. Here's your sales price. You'll want to look at that, make sure it's right. Your name, make sure it's spelled right. All the info you have here for your current address is correct. The seller, this is where they'll be listed. Your lender, hopefully it's Service First Mortgage. This is where we will be listed. And then the type of loan you have, a 30-year fixed, purpose, purchase, product, fixed rate. It's important to look at. If it's at adjustable rate or something you weren't expecting, this is where you would throw up a red flag and talk to your loan officer. Loan type, is it a conventional loan? Is it an FHA loan? Is it a VA loan? USDA loan, you write in there. So here's where you know your loan type. Your loan number or ID is here. So that's the top part. Cruising on down, here's your loan amount. In this case, purchase price is right here, sales price. And this is how much they're borrowing. So the difference is the down payment. Here's the rate. Here's the principal and interest payment. If any of this is a red flag, for instance, you didn't expect to be putting down this large of a down payment, or you thought your rate was different, talk to your loan officer. Keep on coming down. This tells you, can this loan increase after closing? No. Can the rate change? No. Can the principal and interest payment change? No, it cannot. Is there a prepayment penalty? No. Is there a balloon payment, which means after a certain amount of time, the loan's due and payable, all in one lump sum? None of that. This will answer all those questions. This is where it should calculate your total payment. Principal and interest again, which is the same as up here. Make sure that matches. Escrow. Escrow is going to include your taxes and your insurance, okay? So that's real important. This includes your property taxes and your insurance. In this loan, we are, if you look below that, including an escrow account, yes. If you put down 20% or more, you don't have to have an escrow account. That's up to you and your loan officer to discuss. If you put down less than 20%, mortgage insurance. This is where you would find your mortgage insurance. This is a monthly amount. This more or less is in place not to protect the house in case it burns down, but to protect the lender or the loan servicer in case of default on your part. So this is where mortgage insurance would be listed. Total closing costs. This is where the lump sum of all total closing costs of the loan are. Now, there might be some credits included in this, but we're going to show you the total cost of getting the loan for your house is right here, okay? So we're always going to display everything. Now, there might be credits in there, and we'll talk about those in just a minute. And this would be your total cash to close. So if you get to this part and you're like, I wasn't expecting $48,000, I was expecting $20,000. This is where you might want to talk to your loan officer. Keep on coming down the list. Here's where the closing costs will break down. All of this was disclosed to you up front in the loan estimate. The initial loan estimate, most of this probably has not changed. Once you're locked in, this is pretty much fixed. Unless something changes along the way. The rate lock got extended. Let's say the closing was delayed. Something like that. Small changes could happen, but usually they do not. So if you come on down here, this is where your appraisal fees, your credit report, and your prep fees for services that you cannot shop for. Appraisals. Those are ordered by the lender. Most mortgage companies will collect the appraisal fee up front. That's why you see this in this column over here. Okay, on the right side, it says this means it was paid before closing. Credit report is the credit report fee. Doc preps, find that here. Flood check, we always check. Every lender is going to check to make sure the home's not in a flood zone. These are actual costs. Title company fees, depending on which title company you close with, they all have a closing fee. That's called their escrow fee. And then all the other miscellaneous costs that come along with it. There's recording fees, there's guarantee fees, endorsements. All of these things are required when purchasing a home. Okay. Recording fees. Here's more recording. The recording fees here is for recording your loan with your deed with the county. Once it closes in funds, we record that, hey, you're the owner of record now for this property, and that's usually the actual cost to record those documents. Prepaids. Most people will do an escrow account. If you have an escrow account, insurance is always paid a year in advance up front at closing. Doesn't matter which lender you're closing with, every lender is going to collect 1 year up front. Okay? You pick the insurance company, we get the premium, and we put it on here and we pay them up front for a year. The purpose of doing this is to protect against insurance lapsing. So we always have a year in advance, and we'll collect every year for the next 12 months. And then once the premium renews, we pay another year in advance. So we always want to stay in advance. Should something happen, there is no lapse in coverage for you. Prepaid interest. This will count from the day you close. Right here, I'm going to do this. To the end of the month. So if you closed on April the 9th, we collect interest per day through the end of the month. And this breaks down to $18.35 per day, more or less. That comes to $403. Hazard insurance due. This would be to an additional to the any extra amount. Some insurance companies might have a little premium they charge, a one-time fee at closing. So this is where we collect all the stuff that's paid up front. Okay, the one-time cost. Initial escrow. Anytime you escrow, we're always going to collect 3 months extra of insurance and taxes to start the escrow account. The purpose of the 3 months. You skip your first payment. So if you close in April, you don't make a May payment. You have your first payment coming due in June. So with that being said, we need to collect for that month so we have enough insurance when it comes due. And then we collect 2 more months in reserves for a total of 3 months. We do the same thing for taxes. Aggregate adjustment number is a credit to you. Basically, what it is, it's a calculation. So when most escrow accounts are funded up front, we collect a lot of money. And what it does is it balances out what the overage is that they're expecting at the end of the year. So they balance it out through some algorithm, and you'll get a credit back towards all this stuff that we're collecting. It works out in your favor. It's nice. And it varies from month to month depending on how much your premiums are and which month you close. Association transfer fee, if there is an association. This is where the transfer fee would be from transferring it from the seller to you. This adds up all the costs in each segment. This gets to where we had talked about at the top, total closing costs. Now I bring that up because down here, in just a minute, you're going to see the comparison here between the initial loan estimate that was signed and the final. So in this case, the closing costs went down, which was nice. But then we break it down here where your credits are. So total due from the buyer at closing. This is going to take the sales price plus all costs to buy the house equals $241,027 in this scenario. Now, these are all the credits. So your new loan amount is going to be one of the credits, right? So $184,800 is one of your credits. Deposit that you initially put down, there's another credit. On a lot of or many purchase transactions, the seller will credit you for the title policy at closing for their portion. Also, in this case, if there's any seller contributions, so the seller's paying some closing costs, this is where that would be. If there's any lender credits, sometimes lenders give credits, and then you usually pay an option fee up front. This is where you'll find your option fee. And then you'll get what's called tax proration. So the seller's going to give you a credit for the amount of time that they've owned the home. So in this case, the seller has owned the home from January 1, of course, through the date of closing. So that's about, 3 months and 9 days? So you're going to get another credit for that. Okay? So what it's going to take is the total due that we talked about up front, that's to buy the house and all the closing costs, minus all your credits. So in this case, loan amount, title insurance, tax prorations, option fee, lender credits, seller contributions, everything, all your credits. This is what the credits are. And what's left over is what you owe at closing. And I'll show you cash from to right here. So that's pretty much it. Down here, it just goes into some other things you may want to read. Talks about no prepayment penalties and tells you a little bit about the lender. Goes into calculations of how many payments you'll make over the life of the loan, your finance charges. Goes over every bit of it for you so you can read it. Tells you who your lender was. You'll have your agent your real estate broker for the buyer side, seller side, and the title company here. If you ever need their information, you can save this form so you can contact them. Um, so I hope this has been helpful. And if you have any questions, again, my name is Pete Montesino with Service First Mortgage. My contact info is here, but you can always call me at 214-649-4908 is my cell, and 972-608-7501 is right to my desk. Thanks. Hope this helped.